Here is a summary of Moderna's 2026 Q1 earnings call transcript, designed for clarity and to be read aloud. Moderna's first quarter 2026 earnings call summary. Good morning, everyone. Today, we'll review Moderna's financial results and business updates for the first quarter of 2026. Financial highlights and outlook. Revenue. Moderna reported $400 million in revenue for Q1 2026, a significant $300 million increase year-over-year. This strong performance exceeded expectations and was primarily driven by the execution of long-term strategic partnerships, notably with the UK government. Geographic split. Approximately 80% of Q1 revenue came from international markets, with 20% from the United States. Q2 2026 revenue guidance. The company anticipates revenues between $50 million and $100 million for the second quarter, evenly split between the U.S. and international markets. Full year 2026 revenue outlook. Moderna is reiterating its full-year revenue growth target of up to 10%. This forecast accounts for potential declines in COVID vaccination rates, offset by increased penetration of MRNA and revenue from strategic partnerships. Notably, this guidance excludes any revenue from their flu vaccine or mRNA 1010. Profitability and net loss. Net loss. The company reported a net loss of $1.3 billion on a GAAP basis, largely due to a litigation settlement. Excluding this settlement, the net loss would have been $0.5 billion, representing a greater than 50% reduction year-over-year. Cash and investments. Moderna ended the quarter with $7.5 billion in cash and investments, maintaining a strong balance sheet. The decrease from the prior year is attributed to operating losses while investing in R&D, cost management, adjusted cash costs. Significant progress was made in cost reduction efforts. Adjusted cash costs, excluding the litigation settlement, saw a 26% year-over-year reduction in Q1. Moderna remains on track to achieve its full-year objective of approximately $4.2 billion in adjusted cash costs. R&D expenses. R&D expenses decreased by 24% year-over-year to $649 million, primarily due to the winding down of large Phase 3 respiratory programs. R&D spending is expected to be weighted more towards the second half of the year, with full-year expectations at approximately $3 billion. SG&A expenses. SG&A expenses were down 18% year-over-year to $173 million, reflecting continued cost discipline. Full-year SG&A is expected to be around $1 billion, flat year-over-year. Gross margin and cost of sales. Cost of sales. Cost of sales was $955 million, which included $878 million related to the Arbutus litigation settlement. Excluding this item, cost of sales was $77 million, a 14% year-over-year decline, driven by manufacturing efficiency and volume leverage. Full-year cost of sales projection. The full-year projection has been revised to $0.9 billion to $1.8 billion to incorporate the litigation settlement charge. Without this charge, the projection remains unchanged, indicating expected gross margin improvement. Key business updates and pipeline progress. Commercial portfolio advancements. Mcombriax, Flu plus COVID combination vaccine received approval in the European Union for adults aged 50 and above. This is Moderna's fourth approved product, and the first flu plus COVID combination vaccine globally. It is expected to be a significant growth driver in the EU starting in 2027. MRNA COVID-19 vaccine also received approval in the European Union for individuals 12 and older. This is anticipated to be an important growth driver in the EU in 2027. mRNA 1010, seasonal flu vaccine. The U.S. FDA has assigned a PDUFA date of August 5, 2026. The vaccine is also under review in Europe, Canada, and Australia. Oncology pipeline. Intismeran, individualized cancer therapy, initiated a new phase 3 clinical trial in non-small cell lung cancer, NSCLC, for patients with high-risk stage 1 disease. This marks the first phase 3 trial evaluating intismeran as a monotherapy in early-stage disease. The strategy is to intervene early and prevent relapse or recurrence. A 5-year update of intismeran in adjuvant melanoma will be presented at ASCO. The company is excited about the potential of intismeran as a monotherapy, given its strong safety profile, to provide immuno-oncology-like protection with a vaccine-like profile. Phase 3 trials in adjuvant melanoma and Phase 2 studies in renal cell carcinoma and muscle-invasive bladder cancer are accruing events for interim readouts. Phase 1 studies in pancreatic and gastric cancers are fully enrolled. mRNA 4359, cancer antigen therapy. New clinical data was presented at AACR for patients with stage 4 metastatic disease in melanoma and lung cancer. Phase 2 cohorts are enrolling in first-line metastatic melanoma and NSCLC. Other pipeline updates. Pandemic flu program. mRNA 1018, a phase 3 study has been initiated with support from BARDA. Norovirus vaccine. The phase 3 study is fully enrolled, and data is expected in 2026, subject to case accrual. Rare diseases. Propionic acidemia, PA, program. The potentially registrational study is fully enrolled, with pivotal data expected later in 2026. Methylmalonic acidemia, MMA, program. The start of a registrational trial has been deferred until after the PA pivotal readout. Management commentary. Stefan Bancel, CEO, expressed pride in the team's strong Q1 performance, highlighting the significant year-over-year revenue growth driven by strategic partnerships. Emphasized the innovation and patient impact of the new approvals, particularly Mcombriax, which he called exactly what Moderna stands for. Stated confidence in achieving the reiterated 10% revenue growth for 2026 and reaffirmed the $4.2 billion adjusted cash cost target. Highlighted oncology as a key focus, with upcoming data for intismeran and mRNA 4359 and critical phase 3 readouts for norovirus and the PA program. Invited the investment community to upcoming events, including an investor event at ASCO on June 1st and a Science Day on June 25th. Jamie Mock, CFO, detailed the Q1 financial results, reiterating the $400 million in revenue and the substantial year-over-year increase. Explained the accounting for the Arbutus litigation settlement, including the $950 million payment due in Q3 2026 and the recognition of $878 million in cost of sales in Q1. Reiterated the full-year revenue growth guidance of up to 10%. Provided clarity on the revised full-year cost of sales projection due to the litigation settlement. Affirmed R&D and SG&A expense expectations, and confirmed the target of approximately $4.2 billion in cash costs, excluding stock-based compensation, depreciation, and amortization. Projects ending 2026 with $4.5 billion to $5 billion in cash and investments. Significant risk factors mentioned. Arbutus litigation settlement. While a settlement was reached, there's an ongoing appeal regarding government contractor immunity, which could lead to an additional payment of up to $1.3 billion if Moderna does not prevail. However, the company believes a loss in this proceeding is not probable. Future declines in COVID vaccination rates. The full-year revenue guidance factors in potential declines in demand for COVID vaccines. Regulatory delays/uncertainty. Mentioned regarding the FDA's stance on the mRNA 1010 flu vaccine and potential next steps for Mcombriax in the U.S. event accrual for clinical trials. The timing of pivotal readouts for norovirus and rare disease programs are subject to event accrual. Geopolitical developments. While no material impact is currently seen from the Middle East conflict, the company will continue to monitor the situation. Lowlights: the significant net loss in Q1, primarily driven by the litigation settlement, though excluding this loss shows substantial year-over-year improvement. The potential for further payments related to the Arbutus litigation. The ongoing uncertainty regarding the U.S. regulatory pathway for the MRNA flu-COVID combination vaccine. Highlights: strong Q1 revenue growth exceeding expectations. Reiteration of full-year revenue growth target of up to 10%. Significant reduction in adjusted cash costs, and on track for full-year targets. Key regulatory approvals in the EU for MRNA and NXPike, positioning them as future growth drivers. Advancements in the oncology pipeline, particularly the initiation of a Phase 3 trial for intismeran in early-stage NSCLC. Strong cash position providing financial flexibility. Successful execution of long-term strategic partnerships. This concludes the summary of Moderna's first quarter 2026 earnings call. Thank you.